Welcome in, welcome in. Denzel here, your personal finance geek of the 21st century. We're going to have some fun this evening. Hopefully, you have been enjoying these quick, in depth live streams where we go state by state, analyzing the right home equity line of credit in the second position for those of you that are looking for home equity line of credit to implement the velocity banking strategy. Maybe you already have a home equity line of credit and you did not do the right pregame work, you didn't do the right steps in advance. So maybe you ended up with a poorly designed home equity line of credit or an improperly designed home equity line of credit altogether, whether the rate was just really high or you thought you got a home equity line of credit, but in fact it was a home equity loan, and now you kind of feel trapped, and maybe a year has passed, year and a half or longer. We can go on the hunt together, find the right bank, do the pregame work correctly this time, and switch out of that older HELOC into a better HELOC. And then the third category of people are those who have been doing velocity banking. You have a home equity line of credit with a bank in your state, or maybe it's a large bank, and you realize I could probably get a better interest rate. I've been doing velocity banking for 2 years. I've paid off a bunch of credit card debt. I've lowered my utilization down. Maybe I should go look for another bank and have banks compete for my business. I like to always remind my audience, my clients in particular, that we are not married to any of these banks in the United States. You're not married to these banks. I don't know why I see so many people in their 50s and 60s that have been banking with Wells Fargo since they were 20 years old. So they have a Wells Fargo relationship for 30 years, or Bank of America, or Chase. And I'm like, what have they actually ever done for you in the last 5 years, the last 10 years, the last 15 years, other than keep you in debt and not give you any guidance whatsoever? So let's encourage the idea of simply switching. I know it can be a little bit of a headache, but we're talking tens of thousands of dollars that you could be saving over the lifespan of your debt-free journey. You could be saving tens of thousands of dollars by just building a new relationship with a different bank that actually values us, where we're going to get better interest rates, better deals, better offers, et cetera, which could ultimately lead to future better offers on a down payment on a home, let's say a better interest rate, or a car loan, or for a family member. So there's a lot on the table here. So day by day, we've been analyzing states. So we're going to keep that same rhythm going. We're going to dive right into it. If you are someone that, I think my mic is not working properly, but looks like it's working for my MacBook. Let me know if I'm coming in kind of low. Let me know. But we've been going day by day, state by state. We're going to keep this trend going. And let's see if my microphone would like to play nice. Let's see. If you're live, let me know what state you're in. Let me know if you're in the process of looking for a home equity line of credit. Let me know what bank you're looking at. I can look up that bank for you and tell you if that bank is a good bank or not. Okay. So, because my microphone is not working, I'm going to increase the microphone level here. I'll just have to talk louder for you all. Microphone is not playing nice, unfortunately, but that's technology for you. That's what it is. Let's see. Let's take it to the whiteboard real quick. Okay, so now I should sound way better. Let me know in the comments. I should sound better now at this point. Let's begin. Action items on the left-hand side of the board. Everything has stayed the same. This is your guidebook. Okay, you are going to want to write this down for yourself in your own notes. Write this down for yourself in your own notes. This is the parameters that you want to have set up for yourself before you even apply. So when you're looking at these banks, you're already going to have these things in mind. So when you're talking to them, you're just going to be checking. Okay, check, check, check. They have that. They don't have this. They have that. They don't have this. And essentially want to check off as many boxes as we can and narrow the banks down. So you're going to do your market research of different banks. I got 1, 2, 3, 4, 5, 6 banks that I found in the state of Pennsylvania. That is the state we're focusing on this evening, Pennsylvania. No matter where I'm at in the country, I want to see your credit score 720 or higher across the 3 bureaus. I want to see your debt DTI 30% or less. No more than 45%. For the most part, when you get into the 40% DTI or higher, you're more likely to not get the best interest rates on the HELOCs, and it increases your chance of denial because it's just too much debt. They when they run the math, they're going to say, well, this person can't afford this home equity line of credit. Now, there's different ways to finesse DTI, different ways, different things that we can do. For example, there's people who will take personal debt, move it over into their business so it doesn't show up on their credit report. Or some people will borrow from their cash value life insurance policy to lower their DTI so that they can get approved for the home equity line of credit. Maybe a family member might pay off a debt so that they can, so there's different things that we can do to finesse that DTI to our favor to get it exactly where we need it to be. LTV options, 70 to 90% is typically what you'll see with most banks. Some go as high as 95 to 100%. When it comes to closing costs, I really don't want to pay any closing costs, especially with a second position home equity line of credit. If there are any costs, hopefully I get some sort of refund and I end up paying about maybe $500 or less. Intro rates are becoming more and more popular right now. As of September 18th, 2025, prime is now at 7.25%. It was at 7.5%. So the Feds had a meeting and they cut interest rates by 0.25%. Lovely. Competition is going to be opening up. More lending is going to be opening up little by little. But it's going to open up for those who are prepared. Get ready. We are entering into a really fun season of leveraging where velocity banking is going to start to make more sense for a lot more people in the next year. We've been going through a season in this community where interest rates increased so much that you couldn't get a home equity line of credit a year and a half ago for under 8.5%. It just was more rare. You know, prime was all the way at, I think, a high of 8.75 or 8.5%. So a lot of people had 10, 9, 8.5% HELOCs, and it just didn't make sense for them to accelerate their 2, 3, 4% mortgages. It just didn't make sense. It still doesn't till this day for a lot of you. But then there's also people who had car loans at really low interest rates and things like that. So there's that crowd, that 2020 crowd, 2021 crowd, where you locked in extremely low rates on all of your debts except for your credit cards because those fluctuate. So now we're entering a season where there's a big group of you that got mortgages at the highest interest rates that we've seen in years, in 23, 24, 2022. High car loan rates. I'm seeing people with car loan rates at 9, 10, 11%, like it's average. Personal loans, double digits. And now we've seen rates come down about 1.5% since last year. So it's making this strategy is going to have a pop where a lot of people are going to start finding this, and banks are set up perfectly. So you want to set yourself up perfectly for it. You got to know the information. Take the time. Please take the time. It's so important. So intro rates are being offered anywhere from 6 months to 12 months. And there are some rare ones where you can get 3 to 5 year fixed rate right now, around like 5 or 6%. It's really pretty awesome. Interest rate calculation. Is it prime? Is it prime minus, prime plus? What is it? Draw period, 10 years, 20 years, 5 years. Building a relationship is important. That's just you simply becoming a member with that new bank. Before you apply, you want to open up a checking and savings account. You want to move your banking over to there. You want to move your paychecks over there. You want to move your savings over there. Okay? You want to move money to that bank. Also, a critical factor of Velocity Banking is, do they have mobile banking? Do they have an app? How user friendly is it? That increases velocity if I'm able to move money in and out of the line of credit. Lastly is payment calculation. Is it revolving? Is the payments interest only, or is it principal and interest? You will see that when we look through banks and they'll display this is an interest only HELOC, then they'll have a second product. It'll say principal and interest payments. Sometimes that can have an effect on the rate that they give you. Typically, if you sign up for a home equity line of credit interest only payments, typically the rate is higher than if you select principal and interest payments. It's little things like that that can save you 0.5%, 0.25%, that the bank, the person you're working with, is not going to share this with you. They're not going to explain this to you. So you have to do the digging. You have to know what questions to ask. And more often than not, you just don't know what you don't know. So when you don't know what you don't know, you walk in there, you yield to whatever they offer you, not realizing that they have this whole off menu products and services that you can access when you ask the right questions. So for my Pennsylvania residences here, first bank I found, Philadelphia Federal Credit Union. Right now they're offering a 3.99% intro rate for 12 months. Afterwards, it goes to as low as 7%, which is prime minus 0.25%, because prime is at 7.25. So if interest rates go down again in December, you'll be at 6.75. They have mobile banking. The HELOC is set up as interest-only payments. Let's go to the website. Let's take a look at the website so you can see what I see. So you can know how to search for these things. Now, with my checklist, you're not going to get every single detail off of the website, which is why you still need to call and get all the information before you apply. But we can pull some information that will help us narrow where we're going to spend our time. Okay? So with Philadelphia, you get to their website. You're always going to want to look under personal, click under loans. It might say loan, they might say borrow, and then you get to home equity. Click home equity. This is the screen that it takes us to, and we start reading. Tap into equity as flexible line of credit, use funds. Two different options: home equity line, home equity loan. We want home equity line. So it's revolving. That's key. So we know this is open-ended. We have an introductory rate. Great. Mobile banking. Great. Check. This bank covers multiple states. So if you're watching, they cover Pennsylvania, New Jersey, North Carolina, South Carolina. What's DE? I forget. Let me know. Maryland and Florida. What is DE? I always forget. Let me know in the comments. So 3.99. So we see that. Okay, cool. 12 months. As low as. Whenever you see as low as, just translate to your mind perfect credit. You got to have great credit to get that. How do we get that? How do we get great credit? We got to do the pregame work. What's the pregame work? I have a whole entire playlist called Velocity of Money pregame work. You don't want to look at that. I always tell you all, read this paragraph here so you get the full context of this product. See if there's anything else we can find in here, because what information do we not know? We don't know what the DTI requirement is. We don't know what the credit score is. They never display that, by the way. We don't know what the draw period is, right? We didn't see that. Right? They didn't show. They did not show the draw period. So we don't know. So we're missing that. What else are we missing? Closing costs. Does it say it in here? Something about draw period. Maximum, blah, blah, blah. 2%. So we know that the HELOC won't ever go above 18%. Okay. So that's the information that we need to find out. We don't know the draw period. We don't know the closing costs. But this is a formidable option. 3.99% in today's environment is phenomenal. Lock that in for 12 months. How much debt could you eliminate with 3.99%? How much credit cards could you consolidate into 3.99% if you're paying 29%, 30%, 25%, 10% on a car loan, 7, 8, 9%, 12% on personal loans? There's so much you can do just by consolidating. Then when you add velocity, you go even faster. By the time the rate expires, you've already knocked off so much debt. Okay. Next bank, Lebanon Federal Credit Union. They're offering a 1.99% for 6 months. LTV, 90%. That was the other thing we didn't know with Philadelphia Federal Credit Union was the LTV. We don't know. But you would call, you would find out. Lebanon Federal, 1.99% for 6 months, 90% LTV. That was literally the only information I could pull off the website. Sometimes it's going to be that vague. Let me show you what I saw. This is their website. That's what it looks like. Home equity loan at the top. home equity line of credit. Like, that's it. 90% up to 20-year term, no application fee. Like, that's it. That's all they told me. So I don't even know what the interest rate is after the intro rate expires. Let's see if they show it. They still don't show it. Says rates as low as 3.25%. It's like, what the heck does that mean? So we really don't know. But it does say prime plus a possible margin. Very vague. Very vague. But it was enough to put it on my board. Next, Members First Credit Union. They have another 1.99% for 6 months. They did reveal a little more information. Let's take a look together. 1.99 intro rate home equity freedom line of credit. Goes to 7.5% afterwards. So basically it is at prime because rates just changed. But when rates change, they don't typically go into effect till the next month. So if the Feds cut interest rates in the month of September, by October 1st and onward, the banks will adjust for the most part. So we can make a healthy assumption here that if you were to apply at Members First Credit Union and you got approved for the 1.99 for 6 months, you'll probably be at a 7.25% as opposed to the 7.5%. So this looks like they're right at prime. That's how they evaluate their interest cost. When you read between the lines, Members First may pay all closing costs. May. You got to find out, how do I be the person that may get all their closing costs covered? We want to know how to do that. If the credit union is paying any closing costs on your behalf in connection with opening your account, and your account is paid in full and closed within 36 months, you'll be required to reimburse us all third-party fees paid on your behalf upon closing your account. I'm perfectly fine with that. 36 months, not a long time, especially when we're getting this product specifically to accelerate debt. A lot of us that I work with and people that find this YouTube channel, you're sitting on a ton of debt. It's probably going to take you 2, 3, 4, 5 years, 5 to 7 years on average is what it typically takes for most of my clients to become debt free. So I have no issue with this. That's typically how most of them work. Here we go. It's another thing. So we got 80% LTV. The advertised regular line of credit rate is based on prime rates published in the Wall Street Journal on the last business day of the previous month, plus or minus a margin with a floor of 3%. So we want to be the minus a margin, not a plus. And that is all going to be based off of what? Tells us LTV, credit worthiness. What is credit worthiness? Just think 720 or higher. If you have 720 or higher across all 3 credit bureaus and your DTI is at a certain rate and the LTV amount that you're going for, let's say 80% or less, is putting yourself in the perfect scenario. Most of them, when they go to calculate the HELOC amount, they're giving away their information. They often use 80% in their formulas. So you want to do the same on your property as well. So the next one is Visions Federal Credit Union. They do not have an intro rate, but the way their HELOC is set up is prime minus 0.25%. There's no closing costs whatsoever, and they lend up to 100% LTV. So notice how they take away an intro rate, but they give you more capital. So if you're someone that's looking to leverage more capital in your primary residence, maybe Visions might be more attractive than Members or Lebanon. Because you're like, well, I don't mind missing out on 1.99% for 6 months. I can be at prime minus 2.5, no closing costs, 100% LTV, get a bigger access, right? Larger access to the equity. And you might be perfectly fine with that. When we're talking about eliminating debt, I am typically going to lean toward where can I get the lowest interest rate here right now out the gate, typically. Because as I mentioned earlier, I'm not married to any one of these banks. So I'm perfectly fine with switching after the 36-month period to another bank and maybe getting a better offer. Okay? So here's Visions Federal Credit Union. Special HELOC offer, no closing costs. This offer does seem to go away, I think, by the end of the month. Just depends. They don't give a whole lot of information, but from what I was able to pull, I got the LTV, 100%, prime minus 2.5, no closing costs. What's nice is they tell you exactly what you need to apply. But even then, I don't want you to apply, even though you might have all this. I still don't want you to apply because one thing they're not saying in here is open up a checking and savings with us. We're creating that standard. Very important. Next bank. We got Clearview Federal Credit Union. This was interesting because of the rate. 6.75%. So that's prime minus 0.5%. Not bad at all. 85% LTV, mobile banking, no annual fees, low closing costs. No annual fee, but low closing costs. So there is some cost to the product, but for what I'm getting, I'm almost not upset about it because I'm always going to be a half a point below wherever prime is at. It's not bad at all. So I think that's pretty attractive. Let's take a look at the bank's website. Clearview. It says refund on closing costs. They'll refund you up to $200. So that's where it's like, okay, it's low closing costs. I get some money back. 85% LTV, no annual fees, application fees. That's cool. We like that. Competitive low rates. What are the rates? You click and boom, 6.75. We don't know what the draw period is. It just says open, which is interesting because if there isn't a draw period at all, like no time limit, well, that's pretty attractive. It's very attractive. I don't have to like renew it. I just have it for a while. That's pretty cool. Now, the last bank is Broadview Federal Credit Union, which is a bank that we were looking at yesterday. On yesterday's live stream, we were covering the state of Ohio, but I had Googled it. I said, does Broadview Federal Credit Union cover PA? And the only reason why I had the thought to look it up is because when I was researching banks in Pennsylvania, Broadview came up on my search. So I was like, why? Oh, that's interesting. So maybe Broadview covers Pennsylvania. So it says yes, but specific areas. It's not a credit union that covers the entire state. So depending on where you reside, counties like this right here that I can't pronounce, Susquehanna, maybe, Bradford, or Wyoming. If you're in those areas, look at Broadview, because Broadview is also offering 3.99 for 12 months, 7% afterwards. We know they have mobile banking, no issue there, zero closing costs. With Philadelphia Credit Union, we don't know what the closing cost is. So if I narrowed it down based on what we've done so far in the state of Philadelphia, let's say we're looking for a second lien HELOC, my top 3 banks, because you want to narrow it down to like 2 to 3 banks, and eventually you're going to make a decision on one. Philadelphia and Broadview are neck and neck. The only difference is going to be closing costs and if there's an annual fee. Clearview is coming in first based off of the overall interest rate calculation. They're at prime minus 5%. So what do you want? Do you want prime minus 0.5% for the life of that line of credit? No annual fees? Or do you want 3.99% for the first 12 months? Your decision needs to be based off your numbers and all the pregame work that you did. So if you're someone that is carrying a lot of high interest debt, you're probably going to lean more toward this product, 3.99 for 12 months, because of the immediate relief that you may find with this. Then it would be just a matter of picking Broadview or Philadelphia. And the way I would make that decision is whoever is charging the least amount of money. No annual fee, no closing costs. That's who I'm pretty much going to go with. Let's say you don't have a whole lot of high interest debt, but you want a solid overall home equity line of credit product. You're going to want to look at Clearview. There's no intro rate. That's the only thing you lose out on. But you start out the gates prime minus 0.5%. And guess what? If rates go down again in December, another 0.25%, you'll be at 6.5%. That's going to be very attractive. This is also very good information to know, because over the next few months, all of you who are homeowners, you are going to get hit up like never before to refinance your home. When you refinance your home, it comes with thousands of dollars in closing costs. So if it's relief that you're looking for, cash flow relief, instead of refinancing and resetting the clock on your 30-year mortgage, maybe if there's enough equity in the property, we could get a zero closing costs access to equity in your home at a very low interest rate period, and consolidate some other debts outside of your mortgage. Get the cash flow, probably more cash flow than you would with a refi. And it didn't cost you anything. And then where it gets even better is if we're in a declining interest rate environment, which we have been for the last year. We've been in a declining interest rate environment. Interest rates went down last year. Interest rates have been going down again this year. They've just been going down slow. But still, you're in a declining interest rate environment. So you get to benefit if rates go down even further. You don't have to pay to get your credit line reduced by another 0.25%. That stuff adds up to thousands and thousands of dollars in savings. So be mindful of that. That's huge. Some other things to consider when making your decision whether to go with a second position HELOC, a personal line of credit, or a first position HELOC. You're going to want to look at the overall picture and realize that you don't have to settle for just one product. Think of it as stepping stones. You may start with a PLOC, then you get a home, build enough equity, then maybe you get a second lien. And then maybe you finish off the last few years of your debt-free journey with a first lien HELOC. So you can jump from product to product. Once you go to a first lien HELOC, you don't go back to a second lien. That's not how that works. You don't want to do that because you literally ruin the setup. You can go from a second lien to a first. You can go from a PLOC to a HELOC. The only way you go from a PLOC to a HELOC is if you have a property. For those of you who are not homeowners, you stay with PLOCs and credit cards. That's where you stay. Now, if you want to get even more creative, if you have a family member that has a HELOC, or you have a family member that has a home and they have equity, and you team up, you can do velocity banking with multiple incomes and leverage somebody else's debt tool. But in order for that to truly work effectively, you got to be on the same page as a family. You got to be on the same page because infighting can absolutely occur. All right. Let me know if you have any questions. Comment those below. Happy to help on that. So, Glenn says, how about DCU Federal Credit Union, Massachusetts? Let's check it out. Let's check it out. Again, if you want me to look up a state, I've got about 20 minutes left, so I really maximized time this evening, which is great. And for those of you who are present live, what I'm doing is running a promotion on my financial coaching program, my financial freedom program, debt-free program, all in one. Taking $600 off as a gift for those of you who are live. So the link is in the chat. Once I turn the live stream off, you're not going to be able to use that link. So it's only for people who come present, ready to learn, that I know are going to do the pregame work because you're literally doing it with me now. That's the point of this, is I'm making you do the work with me now. Super important. So we got DCU, Federal Credit Union. Let's check them out. Let's see. Okay, so shout out to Glenn. So we go borrow. Let's find out if they even offer home equity line of credit. And they do. So 7.5%, they cover Connecticut, North Carolina, Texas, Wisconsin, and I forgot who WV is. I forget. Let me know. Oh, we didn't read. Is not available in these states. So then they must be available in the other states. So your rate could be as low as prime. So again, their website hasn't updated yet. Interest rates just changed. So this will be 7.25%. So not bad. I like that it's just at prime. To open up your line, you must pay the following fee to us prior to closing. A $300 application fee. I don't like that. You may also have to pay certain fees to third parties, closing, otherwise noted, generally $0 to $3,500. Don't love that. So we got high closing costs, potentially. Membership required. It's important. Looks like they do have mobile banking. That's helpful. They only do 60% LTV. That's really low. Really low. Don't love that. So, Glenn, let's try to beat this. All right? Let's try to beat this. With an intro rate. See what we got. Several credit unions offer City of Boston Credit Union, 5.99. Let's see what City of Boston is up to. Close these tabs. Boom. So Glenn, I already beat you. Introductory rate, 12 months, 5.99%. Followed by a rate of prime minus 1%. Wow. Prime is at 7.25. I would be at 6.25 after enjoying 5.99% for 12 months for the life of the loan. Not bad. They already have their website updated. Prime rate is 7.25%. This is a very attractive product so far. 80% loan to value, 10-year draw, interest-only payments. We have a settlement recapture fee of $4.99 applies only for lines closed within 36 months. No issue. No issue there. We'll keep it open. No problem. So it looks like there might not be any closing costs for this product. So here you have a near picture perfect product. We got City of Boston. We got 5.99, 12 months, prime minus 1. I'm just writing this down. Ten-year draw. Mobile banking. This is not bad at all. Like this a lot. So that means we throw DCU out because City of Boston is competing. Let's look at the next bank, SCU Credit Union. So SCU Credit Union is doing the same thing. 5.99 introductory rate, 80% LTV, 12 months. But they're prime minus 0.5%. And they give the same benefit to interest-only payments. If I'm deciding between principal and interest or interest-only payments, the only reason why I prefer principal and interest is it encourages you to actually pay off the line. That's the only reason why I like principal and interest over interest only for the most part. In my career history of making videos online, you normally will hear me say that. Plus, typically, they do give some kind of additional incentive when you go with the principal and interest. But if there is no incentive and you have the discipline, you're going to pay off your HELOC, go with interest only. Less pressure. I'm not seeing anything else. Okay, so the only thing I don't like, I'm not too upset about it, but they have a minimum initial draw of 10,000 bucks. It's low, that's low. The ones that I really don't like are the ones that have an initial required draw of 25,000 to 50,000. Sometimes that's too big of a chunk for most people I work with, and it just doesn't make sense. What I do like is they have a really large credit line, max of 750,000. Not upset about that at all. Not upset about that at all, buddy. So, yeah, this is cool. So we'll put that, I'm gonna put that on my board as well. SCU. LIEN. Home equity. Uh-oh. Uh-oh. Here we go, Glenn. Competition. Competition. That's the name of the game here. So now we got a bank called LIEN. And what's their full name? LIEN Credit Union. They are offering 5.49%, 12 months, 80% LTV, and prime minus 1%. Very attractive, but what's the downside? They only go as high as 250,000. The other bank was 750,000. So if it was a matter of capital, then maybe you align more with SCU. If it's a matter of best interest rate, best terms, so far, LIEN is doing everything City of Boston and SCU can do, but just for a max of 250,000. There's no annual fees, no application fees. But do they have any closing costs? I don't know. And they've got mobile banking. Let's see. They already updated their website as well. That's cool. Okay, so early turn. Okay, if praise is required, you might have to pay an appraisal fee. If the HELOC is closed within 24 months, then there's an early termination fee. That's what it'll range between. We don't have a problem with that. Must maintain a $5 deposit relationship. So again, you see how they're using the same language I'm using? It's just slightly different. It's part of my parameters. Build a relationship before you apply. Do not waste your credit with a hard inquiry because you chose not to do the pregame work. Please do not be that guy. Please don't be that guy. The reason why I say guys is very rare that my moms listening do this. It's usually the men that think they know what they don't know. I'm like, how do you know what you don't know. Explain that to me. How can you possibly know something you don't know? Right? So oftentimes, again, I'm 29 years old and you're the man of the house and, you got kids my age. I get it. You've been walking this earth for God knows how long. You're so smart. I agree with you. You are. But in this category, you're ignorant and you need to wake up. You need to smell that coffee. It's brewing. The opportunity's right in front of you. You just got to be willing to sit down and do the work. That's all. That's all. So, Glenn, I like what I'm seeing in the state of Massachusetts. Let's see if we can beat that. Then we got Tremont Credit Union. 0%. Oh, they're talking about credit cards. Let's go here. They call it a hot HELOC. Hot HELOC. So you have a 3.49 for 6 months, then prime minus 5. So that's a teaser. 3.49 for 6 months versus 5.49 for 12, which is cheaper. It's going to be the 5.49. Look at that. Minimum score, 720. All these banks, for the most part, operate the same when it comes to qualifications. Okay. So this bank is competing as well, but not as good as SCU, City of Boston, a LIEN. Remember, skip the sponsored banks. They're not going to help you. Figure Avon, they're the worst. It says lowest rate guaranteed. That's tricking you. 6.99. Right? Lowest rate guaranteed. Are you sure? Are you sure? So you got to be careful with marketing. Like I was telling you, banks have a dollar. Where do they allocate their dollar? Do they allocate the majority of their money like Avon toward marketing? If they're allocating the majority of their money toward marketing, they're probably not going to have a great product. Versus another bank that puts less money toward marketing, more toward their product, probably going to have a better product. But problem is, you don't know where they're at. Well, I am Denzel. I'm that guy, and I'm here to support you and help you save tens of thousands of dollars by doing the work for you. And have some fun. So that was SCU. Glenn, I'm happy, Glenn. Honestly, I don't know if there were any other banks that were coming close. So Somerset is another bank I've had clients use. Let's see what they're offering right now. 10-year draw. What's their rate? Don't know what their rates are. But I've had clients use this bank before. Let's see if we can find any other banks. Here we go. 3.49 for 6 months and 6.5 afterwards. So that's prime minus 0.75%. That's pretty attractive. Pretty attractive. But again, it doesn't beat City of Boston, nor SCU, nor LIEN. They're all coming in at better rates. Direct Federal Credit Union, that's what you saw earlier. Let's look at Mass Mutual Federal Credit Union. Let's see what they're offering. Home equity, 80%. Introductory rate, so they have a introductory rate, but just for 3 months. Minus 0.25, prime minus 0.25 is a for me. So not that attractive. Let's see if we see anything else. Uh-oh. Uh-oh, Glenn. Want to borrow. Oh, wow. Uh-oh, Glenn. So, we have a bank here, Shrewsbury Federal Credit Union, is offering a 1-year fixed 5.24%. So far, that's the lowest intro rate that we're seeing. 5.24% 1 year. Or you could do 3 years at 5.99. I would completely ignore the 5-year one. I would ignore that because interest rates may go down in that time. So I don't feel comfortable locking in that high of a rate for the next 5 years. But I am comfortable locking in 5.99 for 3 years. I'm okay with doing that. Because I don't believe interest rates are going to drop that fast within this current administration. Highly doubt that. Highly doubt that. So 5.99%, 3 years, 80% LTV. Prime minus 0.5%. Not bad. So you'd be at 6.75 afterwards. The other banks were prime minus 1%. So it's tough, right? But high competition so far in the state of Massachusetts. No closing costs with this bank. That's cool. No closing costs whatsoever. 10-year draw. And we got 100% LTV. So they go 80 to 100% LTV. No closing costs. 10-year draw. I'm not upset. I'm not upset. So Shrewsbury. Okay. Folks, we have hit the hour mark. Did a very good job. We covered 2 states. First half of this video, we covered Pennsylvania. We looked at Philadelphia Federal Credit Union, Lebanon, Members First, Visions Federal, Clearview, and Broadview. Out of these banks, the most attractive ones on the board is going to be Philadelphia, Broadview, and Clearview. Clearview is coming in at the lowest interest rate for the overall product itself without an intro rate. So it's got the lowest interest rate, 6.75%, so that's prime minus 0.5, 85% LTV. Philadelphia and Broadview have the same intro rates of 3.99% for 12 months, and then it goes to prime minus 0.25%, so 7%. Interest only payments, I think it was 80-90% LTV. You got these teaser banks with the 1.99, 1.99. And then you have another competitor, Visions Federal, which was prime minus 0.25, no closing costs, 100% LTV. If we're talking interest rates, Clearview is coming out on top. If we're talking overall health, I'd say Philadelphia and Broadview, because you do have that low 3.99 for the first 12 months. That's pretty attractive to jumpstart. Okay. Then we went to Massachusetts, City of Boston, SCU, LIEN, and Shrewsbury all offer a 1-year intro rate at 5.99 to as low as 5.24. So Shrewsbury is coming in first place out of these 4 banks from an intro rate perspective. Shrewsbury also has no closing costs, mobile banking friendly, 10-year draw, 80 to 100% LTV. And they also have another 3-year fixed rate option at 5.99%. Not bad. What do we not know about Shrewsbury? We don't know what the max credit line is, I think. Let me go back. No, we do. 250,000, same as a LIEN. So I think SCU is coming in first place for the largest credit line access, 750,000. Shrewsbury is coming in first place from an interest rate perspective and longevity to lock in a low rate right now, 5.99. Super attractive, no closing costs. Hard to argue with that. 250,000, you can do a lot with 250, the average American. So there is work to be done. There is work to be done. Very, very helpful. Hopefully this brought you a ton of value. Be sure to stay tuned in tomorrow. We're going to do this again. We'll see how many states we can cover. We're going to keep doing this, helping you save tens and thousands of dollars just by getting the right tool to implement the strategy of velocity banking to accelerate your debt and or leverage debt to create more cash flow in the future. So we can do both. The offer to work with me one-to-one, this is for those that want to take it to the next level. Like, okay, Denzel, you've helped me save thousands of dollars just by watching videos. What could we do together? We probably do a whole lot. Okay, I've been serving over 1,000 families over the last 7 years. Been able to work with over 1,000 plus families. So I have really good hindsight on so many different situations and examples and opportunities, things like that. Only for live streamers, this offer is available. So if you're watching the replay, this won't be available. The link only goes active when I'm live. So I'm basically just rewarding those that do the work in advance. I want to give you that big discount there. And with that, we'll end. God bless you. See you tomorrow. Have a good day. Have a good evening and talk soon. Bye now.